Let's go straight across to the management of Zensar Tech, which has reported, well, a mixed quarter. We have Mr. Sandeep Kishore, the CEO and MD of the company, joining us to discuss the quarter gone by, as well as what we can expect from FY19. Mr. Kishore, good morning and thanks for joining us. Let me just begin by asking you about how you have made, or what you have made of this quarter. What is your assessment, and what can we expect in FY19 going forward?
Sure. Good morning, and thank you for having us. We are executing quite well as per our strategy. This is our fourth consecutive quarter where we have delivered 3+% sequential growth on the top line. Our profit after tax also grew on an yearly basis by about 7%, sequentially about 23%. So, we are executing well on the numbers. Digital, which is the forefront of our investment and really client centricity in the solutions that we have built, has now crossed 40% of the last quarter business. On an annual basis, it's about 38%. Digital grew by over 8% sequentially and 35% on a year-on-year basis. So overall, I think we feel pretty good that we are quite aligned to digital-led transformation program for our customers.
Mr. Kishore, when it comes to digital-led transformation, have you earmarked any investments for FY19? What kind of funds can we expect coming in, and what kind of growth can we expect from this particular segment? Because several of your other peers are looking at well over 20% growth even in FY19. Is that also possible for you when it comes to digital services?
So yes, digital services, I think will continue to grow north of 20% year on year. If you take a look at it, digital 2 years ago for Zensar was about 20% of our total global business. We've almost doubled it in a 2-year time period. And I feel pretty confident based on the pipeline that I see, the client conversations that we have, and we have acquired 2 companies digital-led in fiscal 17. In fiscal 18, we acquired 1 more company, which also brings significant digital capabilities into insurance market segment. So overall, I feel pretty good about the digital-led growth, and it definitely will be over 20% on the digital platforms.
Mr. Kishore, we want to get a better idea of the kind of conversations that you're having with your clients right now, what they expect from you and how you're helping them. Also, has the traditional and legacy business taken a little bit of a backseat in comparison to, say, for example, change the business deals? And can you tell us a little more about how that stacks up as against run the business?
Yeah, absolutely. I think it's fair to say that today, over 3/4 of the deals and the pipelines that we have with our customers have a component or more of digital, which used to be probably half a year ago. So consistently, digital is becoming the center play, not just from a technology point of view, but also as a business itself for our customers, which are predominantly in financial services, largely insurance, retail and consumer is almost 30% of our business, and manufacturing, which includes significant portion of high-tech, where digital anyway is mainstream. So I'm not surprised that given the market segment that we are in, over 75% of the pipelines and the deals are in digital. I should also add that clients more and more are looking for not just pure play services and consulting led. They do want partners like ourselves to come with own platform, which basically enables them to launch their product faster, improve their own go-to-market. So it is moving into a platform plus services rather than a pure play services only.
Mr. Kishore, finally, while we do see Zensar focus on digital services, one of your other peers had suggested that they wouldn't mind sacrificing a little bit of their margins and focus a little more on growth. I actually want your comments on growth as well as how you expect margins to be. Can we expect that same trend to turn out for Zensar Tech as well?
I can't comment for others, but from our point of view, we have clearly stated it for about 2 years now that we are aligned to growth. And through automation, through platforms, through digital investments that we've done, we do think that we can maintain the margin profile that we have here.